ब्रांच के चेयरमैन भी तो बकायदा डालते हैं काउंसिल को नहीं देते।
Should I start? Sure. Good evening, everyone. It's my honor to welcome the board members, participants from various regions, and our eminent speakers from different walks of life present here to share their knowledge and experience with us. This webinar will address the topic internal audit of procurement to pay and order to cash processes. For the same, I'm glad to have this opportunity to introduce our speaker, Mr. Vijay Kulkarni ji. He is an associate member of our institute and he has done his MCOM from University of Mumbai. He carries an experience in the field of internal audit and risk advisory. He is manager of audit at a well-known CA firm Kirtane and Pandit LLP, Mumbai, working as an integral part and leading a team as a part of the firm's practice of internal audit and risk assurance for mid-size and large corporation pan-India. He actively involves in research and development of a new age IA techniques and is involved in various social causes for the betterment of society. He would enlighten us on the P2P based perspective, which includes evaluation of procurement policies and practices, supply selection, contract management and invoicing payment processes, and internal control therein. That's all from my side. Over to you, Mr. Kulkarni ji.
So, good evening, everyone, for attending this session, Internal Audit of Procurement to Pay. First of all, a very thank you to our chairman, sir, Rajendra Kumar.
Very good evening, Mr. Kulkarni.
Good evening, sir. Good evening.
Very good evening. It is very nice that we have such a fantabulous program that is being held. The topics are internal audit of procurement to pay and order to cash process. Yes, the Internal Audit Standard Board has always been very keen to hold such kind of programs. I would like to put it very candidly that I was inducted to the council in 2004, and then I was the founder chairman of this board. At that time, it was Internal Standard Committee. And since then, we have gone a long way in ensuring that our members are educated, made aware for each and every aspect of internal audit. Internal audit essentially is a sunrise industry, where on a daily basis there are changes. Every Wednesday from 5 to 7 p.m. I would like to put across that your institute, the Institute of Chartered Accountants of India, which was set up an Act of Parliament way back on 1st July 1949, when the most important document to the democracy, the Constitution, was not adopted. The pertinent reason why they set up an Institute of Chartered Accountants of India even before setting up their democratic front. The answer is very simple, very candid. They were looking for certain discipline. Of confusion. So, ladies and gentlemen, there we are. We are the financial soldiers to this great country. With the advent of profession, we started with statutory audit and then we came to internal audit. May be system audits, may be information system audits, may be cyber security audits, but largely internal audit compasses a very significant role where an internal auditor, who is essentially a management service provider, reports to the board or to the audit committee. When you go on to specific areas where you need to focus on and create checklists. Today, I have come here, the chairman has not come because the meeting of the board is going on. And there, we are bringing on board the checklists. We have created a lot of checklists which we can use to distribute among fellow chartered accountants so that they are effectively discharging the professional duties which have been entrusted to them. Ladies and gentlemen, going ahead, I am very happy to announce that our Internal Audit Standard Board is holding two very important, ambitious programs. Number one, concurrent audit course, which is attended by and large by so many members across the country. And we have an internal audit program where we teach chartered accountants how they can use internal audit to effectively service their clients, and not only the clients or stakeholders, but the regulators and the government as well. Ladies and gentlemen, to put people feel that they understand internal audit and technology, but that is not the fact. You have to be abreast on a daily basis. If internal audit was a man, he would have said a couplet कि क्या यूं ही मुझे चंद लम्हों में पढ़ लोगे तुम, क्या यूं ही मुझे चंद लम्हों में पढ़ लोगे तुम, मैंने खुद को लिखने में बरसों लगाए. The most important thing which I want to put across is that you have to very effectively understand, assimilate, and bring on board certain best practices coupled with technical knowledge to ensure that all who come across us go home enlightened, putting at rest all the doubts. So, not speaking much, I would give back the dais to Madam Meher Talreja, who hails from Gandhinagar in Gujarat. And I'm so happy that she has consented to be the moderator for today's session. Over to Madam Meher.
The pleasure is mine, sir. Completely happy to be with you. And I had introduced the topic for the day. So Mr. Kulkarni ji would continue the same. Over to you, sir.
Thank you, Nanda ji, for your kind words. Thank you, Meher. So I will. Meher, can you please confirm whether my screen is visible?
Yes, sir, it is visible.
Okay. So
go ahead.
Starting with the today's session. So, our today's topic is internal audit of procurement to pay process-based perspective. Okay. Before starting with the internal audit, first we need to understand what is internal audit and why internal audit is needed in any of the organization. First of all, internal audits help organization accomplish their business objectives, create a systematic approach to monitor and evaluate the process and procedures, and create a roadmap for improvement of the strategies. Second thing, why internal audit is important. So basically, internal audit is important from top level to bottom level. It is important to keeping the employees alert about their responsibilities, which helps in improving their efficiency. Third important point is one of the main objectives of internal audit is to keep stringent controls of the activities of any of the organization. So basically, whenever we are into internal audit, one basic thing which we always hear is controls should be strong. So what are the controls and why they should be strong, that we will learn in we will understand into today's webinar. So thank you, Nanda ji, for providing me this opportunity. So let me give you a basic example of what are the risks because of which there are the controls should be important. So let me give you a classic example of one of the popular OTT programs where one senior management approved contracts to purchase IT products and services from smaller outside vendors and authorized the corresponding payments as part of his role. So this is a classic example of lack of controls in any of the organization. So however, this guy selected the IT contracts according to kickbacks he would receive rather than on their merit. As evidence of trial, such that OTT platform internal controls failure allowed that person to employ a pay-to-play scheme. Example, if I am paying you some amount, so your show would be played on my OTT platform. As a part of his scheme, he approved millions of dollars in contract for goods and services, and in exchange, he received around $5 lakh and stock options from 9 tech companies. So let us start with today's session with a lot of excitement, learning, and knowledge sharing. So hope my screen is visible. Before starting, let me show what all things we are going to cover in this program. So index of contents. First, we'll learn what is definition of internal audit, which has been provided by IIA. Second, what are the expectations from we as an internal auditor and what are the internal audit functions? So third point, which we'll understand is look at the internal audit process flow. So there are 4 pillars of internal audit process flow, which we will be understanding in today's webinar. There are various processes, and I will provide you with a classic case examples of procure to pay audit, which I have experience of around 4 to 5 years I will provide you with a lot of examples through which you will understand where a company can go wrong and what are the risks which are involved, because of which the example which I gave may or may not occur. What are the challenges for an internal auditor and value addition tips as an internal audit for internal auditors. So definition of internal audit. The first thing which has been provided by IIA, this internal audit is an independent objective assurance and consulting activity designed to add value. So what we understand by add value, the basic thing why internal auditors are appointed is they will provide an value addition to any of the organization and improve the organization's operations. It helps organization accomplish their objectives by bringing systematic disciplined approach to evaluate and improve effectiveness of risk management, control and governance process. So the basic keywords which we need to understand is, generally statutory auditors are considered to be independent because there is a specific standard for them. But for internal auditors also, the main and the core thing is independence. So without independence, an internal auditor cannot flourish with his objectives and goals. So going to the next slide, what are the as I discussed, what are the expectations from any of an internal auditor? So first thing is, what are the expectations from the stakeholders who are appointing us? First thing is audit committee. So what an audit committee would require? He would require an executive summary, that are crisp reporting and assurance of effectiveness of controls. Since they are hiring us, their basic expectation is to check whether all the controls in the organizations are effective and they are in a working conditions. Whenever we go for an audit committee, we generally check, we only take the high risk issues which have been observed for the audit and not the medium and the low observations. The risk rating will be discussed later in this webinar. And the second thing which is important for an audit committee is the statutory compliances should be 100% compliant, because as we know, statutory compliances may have certain legal implications also, legal and penal implications. The C-suite level, for any of the organizational management, as I discussed earlier, a value addition is important. For example, if I am doing an audit for Q1 and the same scope I am taking it for the Q3 also. So there should be certain value additions for the management, certain improvements which I will provide to the management, that will provide us value addition, and the client would also be happy with our observations. So basic thing which we need to consider as an internal auditor is that our duty is not to find an observation. Our duty is not to find any mistake in an organization. Our duty is to provide them with a value addition. For the second important thing for any of the organization is there should not be any revenue leakage. There should be an emphasis on the cost control measure, and the audit fees which they are paying, that should be mapped with our reporting observation. For example, if they're paying us a huge amount, they're paying us with certain amount, and we are providing them with our observations or value additions for 1 or 2 points. So the client would not be so happy that that with the audit fees which have been paid. The third point, the third stakeholder to whom there are process owners. Process owners are those with whom we generally communicate. We take walkthroughs with them. Sorry. So the basic thing is understanding the work constraints on the ground level. Generally, we must have felt the process owners or the workers who are working or the management, they would generally tell us that in this industry, such processes are only followed. So we need to take into consideration such point and later discuss whether what are the risks there, if there is any risk because of which so we need to consider this point. And if at all during an audit there is certain report or there is any reportable observations, and if they are backing up with certain documents, then that specific point should be closed from our end, and it should not be taken to the top management. Because for the process owners, we need to have confidence in they should have confidence in our audit. So it is a two-way journey for both of us. So let me explain. As I discussed in the index of contents, audit process, there are 4 pillars in audit process: the planning, the field work, reporting, and follow-up. So in detail, I will explain you in the later slides. So let me give you a brief idea of what is planning. It basically is we need to define the objectives and methodologies. So this is the first stage. When we send an audit notification letter, gather the background information about the client, how the industry works. So this would help how the industry works. This would help us to identify the risk in such industry, and on that basis only we can give them the certain recommendations and what are the implications for such observation. For that, there would be a team of I think around 4 to 5 people who will be auditing. So they should have a discussion. They should understand the industry where they're working. They should understand the management. They should understand the workflow of such organization, and on that basis they should create an audit program. The second point is we need to discuss our audit program with the management. So they would give us certain gray areas which we need to consider. We should take inputs from them. We should explain them the time period within which we need to complete, within which we will complete the audit, and the resources that they would require, or we will be providing them. So as we know that failing to plan, failing to plan is planning to fail. That is a famous quote. So that's why the first stage of planning is very important for starting the internal audit. The second stage is field work, where we gather the audit evidences to accomplish the audit objectives. We will conduct interviews with the management. We would review the documentation and process. So documentation plays a very important role, since if any observation we are giving to the management, they should be backed by certain documents, without which the management may not take our audit observations very seriously. We need to do, on the basis of the observation, on the basis of the documents which we have received from the management, or the data which we have received from the management, we should do analytical. We should do analytical. There are certain software tools also which are available in the market, which would help us to analyze the data. But however, we need to use our brains to get the output which was required from the input we are giving to the software. The third is the basic next thing is the exit meeting. We need to discuss the audit results with the management or the lower level management also. We need to understand their queries. We need to understand what actually what is actually how the industry works. We need to resolve the questions and the concerns. We need to discuss what are the corrective action plans which they are going to take. So the next stage is the reporting work. We need to communicate the audit results. So basically, there is a draft report which is provided by the internal auditor, which I will show later in this webinar. We should obtain management comments from them. We need to discuss the risk. We need to discuss why such observation was first of all in place. So we need to distribute the final report to appropriate and required individuals later after receiving the management comments from them, and also the target dates, that within what period we are going to cover this, within what period we will be closing this point. So the next is the follow-up. We need to interview the staff, review the processes and documentation, and re-audit. If the management is telling us there are certain points which we have closed, so we need to re-audit such areas, so that the same observation or the same query will not be raised again. So in detail, I will explain the first pillar, which is a planning. So the objectives, so first point is defining audit objectives. The objectives should be define the purpose and the scope. So why we are auditing is the first question which we need to ask. So what are our objectives? So generally the objectives should be SMART: specific, measurable, achievable, relevant, and time bound. Second point is understanding the organization. As I explained earlier, we need, in the planning stage only, we need to understand the organization as well as how the industry works. We need to take a business information, sectoral updates, background research, the impact due to the external factors, etc. The third point is the identification of the audit universe. There may be core plus as well as support functions in any of the organization. The core may be, as we will be discussing, the procurement, P2P, O2C, or production, inventory, and in support area we have the IT, HR, admin, etc. So we need to identify which area we will be auditing. We can also merge a core and a support functions while auditing. So the risk assessment, so timely identification of risk applicable to the business. For the timely identification of risk, we need to ask the management whether they have prepared any risk control matrix, or we should provide them with the risk control RCM, which would be beneficial for them. So if in every area whatever we are auditing, there should be a risk RCM, that what wrong can go in that specific area. And the next point is an engagement letter. What is the purpose of the audit, the scope, and the responsibilities of both the parties. Next stage, in the planning stage, the next is the audit planning. As I discussed earlier, the resource allocation, the skills required, the time frame, whether our articles or the whether our articles have a prior experience of internal audit, the training which would be required, and the next stage will be audit plan discussion with the management. So we will be preparing certain LOR which will be discussing with the management. So whether there are any changes would be required. Whether there are any feedbacks which are received from the management, we may prepare an LOR which would not be which may be not be applicable to the to that specific industry. So we should be open to such feedback from the management. We will be changing the LOR which has been prepared. So board and audit committee approval. The annual audit plan should be tabled before the board and the audit committee for their approval, and then the implementation of the audit plan. Whatever the planning which we have done till now, that should be implemented. Without implementation, just planning on the Excel sheet, it is not relevant for the audit. So conduct the audit as per the plan and map the process against the each other. We need the audit plan if there are any changes from the audit committee after taking the due approvals. The second pillar is the field work. When we actually go to the place and to their client place and we'll do the audit. So first thing is the field visit. We will conduct walkthroughs, interviews, data collection. So basically, I will tell you one experience where during the walkthrough, even we need to write the name of the security guard or the name of the security guard. So if you are doing admin audit, the name of the security guard and the name of the person who will be showing us the date, timing, everything should be written in so much detail that the next person who will be reading those walkthrough documents, he should understand everything from point to point. So the interviews will be taken from that from the other person, the data collation, the testing, and the next is the testing and examination. As I discussed earlier, there are certain tools which are available in the market, so we need to perform analytical procedures. So the biggest tool which we have within us is our brains. We need to apply our brains, even though there is a software which will give us certain output from whatever input we will give. We need to do analytical procedure. Sometimes the output may be wrong, sometimes the output may be correct, but we need to apply our brains to understand the documents and understanding data also. So we did the internal controls. We can take a sampling method. Benchmarking should be done, because for taking the observation to the top management, we should consider the concept of materiality also. So as I discussed, document and the evidence part is very important. There should be the observation which we are showing it to the management. We should be backed by the certain documents. We should be backed by the proper should be backed by the proper documents. There should be an observation tracker, control evidence, etc. So next point is the communication and preliminary reporting. So the whatever the communication, it should be open with all the levels, provide preliminary updates to them, flash the report in front of the management. What are the queries which we need to discuss? The queries all should be discussed with the management, and we should wrap up an exit meeting. The next point, we should provide a summary of observations which we would prepare and call for an exit meeting. Record the comments which we'll receive from the management. We should test whether the comments which have been given by the management are relevant to the observation. For example, if we are giving any observation relating to P2P and he is providing in our management comments which is irrelevant, and because most of the times the management may not know what is our intention, what are the risks which we involve. So basically, for a management, everything is right till it is wrong. So we need to record their comments and the target dates till the time which they will close the report. Third is the reporting stage. As I discussed earlier, there should be a audit report preparation, compiling of the information gathered. There should be a predefined report format or template, which I'll show you. So audit objective communication. So what is our objective for doing the audit? There should be unbiased, highlight the findings, control weaknesses, non-compliances. So internal auditor's job is not to find the mistakes. It is to provide us the value additions. What are the opportunities for improvement that we should need to take into consideration? There should be clarity. Whatever point which we are writing, it should not be vague, and it should be relevant to that observation. It should not be vague, concise language. The statutory updates which we will be giving, it should be amended. For example, it should not be around to, for example, example, in some of the earlier reports which I have read of the other clients, they were finding the observations of the service tax also, but which is not so relevant to as on today. So to about technical jargons, terms, etc. So executive summary, so the risk rating is generally high, medium, and low. High observations are there in which the top management would require specific attention for the high level observations. So for high level, we are covering the high risk issues for the audit committee or board level. Finding and recommendations, the detailed description of each finding along with the evidence and practical solutions. The solutions which the management is, in most of the cases, the management is all well versed with the issues which there are in which are there in the organization. So the so for us, our main duty is to give them with the practical solutions that how you can improve so that the such observation will not be repeated again. We need to do the root cause analysis. Generally, while we are auditing, we need to do the root cause of why such problem is created. Whether the problem is due to people, whether it is problem is due to the for example, people is the manual errors. For example, if they are maintaining an Excel sheet, if there are any errors in the Excel sheet, whether it is due to the business process, for example, there is no SOP only. So this is the business process, or else it is an IT. For example, if there is an IT means there is a system with any ERP or Tally, which they are any modality which they are not using. The third point is next point is the risk assessment and impact analysis. So analysis of the risk and its impact if the observation is not remediated. Distribution and review. We need to, so during the planning stage only we have discussed the time period within which we will be covering the audit. So we should try that such audit, the audit should be completed within the time frame. So and the report should be distributed to the stakeholders, including the executive management members, audit committee, etc., for their consideration. Continuous improvement, feedback from the stakeholders on the usefulness and effectiveness of audit. What are the improvements which they have made? What are our value additions to that to the organization? And basically on such things, such value additions which we will provide only, we will get a renewal of will get the renewal next time. That internal audit assignment. So next point is the follow-up stage. So after we have prepare the audit report, our management we received the management comments, but there may be certain observations on which will be open and not be closed, because it may take certain time for the management to close that specific point. So we prepare an ATR. ATR is an action taken reports. So this follow-up stage is basically the ATR which we prepare. So we need to monitor the status of the corrective actions in the report, to review the evidence, ensure implementation. We need to track the progress. For example, a basic example which we follow is if the first time a management is giving a target date. Okay, so when we go to the next meeting, if he changes the target date, we should not directly delete it from the Excel sheet. We should put a strike mark against that target date and we should write the next target date. So that will keep an audit trail of what was the previous target date which was given and what is the next target date given. So such mistakes we need to avoid. So validation of improvement, to validate whether the corrective actions are taken by the management, address the identified issues, and a periodic communication should be done to the stakeholders. So there may be certain cases where escalation is required. If the management is not providing us with the required data, then escalate the matter to the senior management if in certain corrective actions need to be taken. If they are not provided us with the required information or the or their management comments, then we need to escalate it to the senior management. Generally, the first level is taken from the from the process owners or the management also. If they are not providing us with the required information or the management comment, then we need to escalate it to the senior management. Closure: once the internal audit team is satisfied with the corrective action and your ATR is prepared, have been and the corrective actions have been successfully implemented, and all the points which we have raised have been closed. We need to take the documentations, we need to take these supporting documents from the management, and we need to close and report it to the stakeholders. So coming to our main audit, the P2P cycle. So for understanding the P2P cycle, excuse me. So the P2P cycle starts from a requirement planning. So request for quotation, creation of purchase orders, preparation of goods received note, the goods when are actually received, creation of payment invoice, the payment and the reporting. So all these points we will take it into in detail in the next slides. So the checkpoints for the P2P cycle. There should be a well-documented procurement policy. So before starting with the P2P, let me tell you a simple process flow of the P2P cycle. First, the PR is generated, then PO is generated. Afterwards, a GRN is generated. So PR is a purchase requisition, purchase order is generated, then the GRN is generated, invoice is generated, and payment is generated. This was the traditional method of auditing. This was the traditional method of auditing, where we check the PR whether it is mapped to the PO, then it is mapped to the GRN, invoice, and then the payment. So later in this session, I will tell you what are the next few methods which we need to implement so that our internal audit would be fruitful. So well documented procurement policy. So developing the policy. So what are the checkpoints which we need to consider as an internal auditor before starting the audit or while doing the field work? So there should be a developing the policy, establish a well-defined policy that should be followed by everyone. A regular training should be given to all the employees for following up the SOPs. A regular review and updation of the policy to keep it in line with the company's requirement and market scenario. So let me tell you why SOP is important. So it improves the efficiency and decisions and which are in line with the organization goals and objectives. Certain observations which we may get in the SOPs are SOP control number may not be there. For example, V1, V2, V3. They are not maintaining the version numbers. So there is no mention of who is the preparer or who is the approver of such SOP. One important thing which I had in my as per my previous experience, the SOP which was prepared, it was in Word editable format. So such things should not happen, and we should take such things into consideration and report it to the management, or at least discuss it with the process owners. So second thing is a supplier selection and management. First thing is a selection criteria to define clear criteria for selection of the cost, quality, reliability, references, and ethics. The vetting process, implement a strict vendor vetting process, including the background verification, financial stability, or any litigations which have been going on against that supplier. The periodic performance reviews and audits of vendor or supplier should be considered. So let me explain it to you with an example. So what we should do, we should take a KYC documents are collected from, we should consider whether the KYC documents are collected from that supplier, whether the financials are taken, and whether a detailed analysis on the financials have been done, the quality of the raw materials which has been provided, we should check. So let me tell you why quality of a raw material is important. So whatever the goods which have been supplied by the supplier, at the end use would be in the preparation of the finished product. So if the raw material which has been received is not of proper quality, then there may be high chances that the finished product would be a defective product. We should check for the Google reviews, whether the supplier's name is in the defaulter list, or whether the proper GSTN number should be collected. One important thing which I would like to mention is that generally we need to do analysis of who all are the suppliers. So through this analysis, we would understand that if there is any over dependency on a single vendor. For example, let me give you a classic example of a perfume industry which I was auditing. In the perfume industry, there were only 4 to 5 suppliers who were supplying the raw materials which were required for the preparation of the perfume. And one such supplier was contributing around 60% of that of the finished product of the raw material which he was supplying. So the risk which was involved is, what if the 60% supplier goes bankrupt tomorrow? So my whole production cycle would go on a toss. So we need to consider whether there is an over dependency on a single vendor. The next important point which you need to consider is standardized purchasing process. We need to consider whether the purchases have been done from an approved vendors only. We need to take from the management the approved vendors list, and on that basis only, and the purchases have been done from the approved vendors only. The next point is the process automation. Automate the purchasing process where possible to which would reduce the manual errors and increase the efficiency of the procurement process. Process audit should be done, regular audit for that specific reason why we are appointed as an internal auditor in any of the organization to do the process audits, regular audits of the purchasing process to ensure the compliance, industry benchmarking, map similar practices which have been followed. For example, I gave you an example of a perfume industry. So we need to analyze what are the industry benchmark, what process they are following, what are the peers are following. So let me explain you why the standard purchasing process in detail. So this point where the process automation is required, our basic understanding is PR to PO to GRN to invoice and then later to payment. So if at all there has been cases, if at all there are any cases where if at all there are any cases where a PO is generated before the PR or a GRN is generated before PO is generated late, after the GRN is generated after the PO, then one important thing, the system should not allow that there should be a break in the process. The system should restrict generating of GRN before a PO, or system should restrict generation of a PO before PR. If someone tries to raise the PO without PR, then it should be highlighted and a notification should be sent to the top management that there are such cases. So one important thing which I would like to contribute is that the PR, PO, GRN, invoice and payment in the system should be should be serially numbered. Such checks should be done by the internal auditor. The next important thing is the purchase orders. So sorry. There should be for PO requirement, there should be mandatory usage of PO for all the purchases. As I explained earlier, the PR should be generated only after the PR should be generated before the PO. The purchase requisition to precede the purchase order. The PO details specification in PO, including the item description, cost, the product description, date should be done. The PO approves whether the DFP which we check, the DFP is a delegation of financial powers. That it should the POs is is authorized as per the authority matrix only. This point we need to consider. So in this case, a classic example which we all may be knowing is the point of split POs. For example, if a senior management person is having a authority to approve POs of 50 lakh rupees, and a middle level management person has an authority to approve POs of 25 lakh rupees. So there may be cases where purchases have been done for a 50 lakh rupees, but two POs are generated of around 25 lakhs and 25 lakhs. So ideally, that such approval should be done by the top level management only, since if we add both of them, it will be around 50 lakhs PO. But but there may be cases where in case of split POs, such approval would be done by the middle level management only, which ideally should not be done, and it is a risk area. Other important point is next point in which we need to check for in P2P cycle is a goods received note. So in this point, whether GRN is entered for all the incoming materials. Check for delay in creation of GRN and reasons thereof. Whether segregation of duties is followed. The quantity of GRN differs from the PO. The linkage of PR, PO numbers in the GRN register. So let me explain it to you. There is a PR. Afterwards, the PO is generated, and then the GRN is generated, and later invoice is generated. So the quantity which was asked in the PR, the same quantity should be in the PO, and the same quantity as well as the product description should be in the GRN also. So we as an auditor should map all the three PR, PO, GRN, and invoice and payment. And the payment should also be done for the same quality product, same quantity of product, and the same at the same rate. If there are any negotiation, that is a different case, but we need to check whether there is a linkage of PR, PO, GRN, and invoice and payment. The next point which is important is that I will like to add more in the GRN. So one important thing is whether the actual inward in the factory and the date of raising GRN, whether there is any difference. For example, if the actual if any actual inward of the product is on 4th December and the GRN is prepared today, so there should be not be a if slight delays. Ideally, GRN should be booked as soon as the product as soon as the raw material enters your premises. But if there has been a slight delay, then it's okay. So in one of the case which I have audited, in that specific case, the GRN is raised for the goods which is ideally produced for the company by the company, which was produced by the company, and still a GRN is raised. So it is not ideally possible. So there may be cases where a quantity excess have been received. For example, we have asked for 100 units, but actually ideally the goods which have been received was for 120 units. Earlier I spoke about the traditional method which we have been following of PR, PO, GRN, invoice, and payment. So in the modern internal audit, what we should do, not only the system based audit we should do, but second important thing, whether the goods, we need to consider whether the goods have been actually received. So next important thing is how we will know whether the goods have been actually received by the management. So we need to consider what is the usage of that goods which we have received, in which final product that product will be used. We need to take a BOM of all the materials which have been used for that final product, and we need to check whether the GRN which have been received as per their documentation, whether actually that product has been used for the final for the production of the final product. So this important thing generally people miss to check, because as per them, as the paper is the documents are correct, the Excel sheet is correct, the system is correct, but we need to check whether the goods which we have received, whether they have been actually utilized for production of the product which we will be producing. Next important thing is the payment processing. The payment all should be approved. The payments should be done only after the PO, GRN, vendor invoice. After the receipt of the invoice, the payment authorization should be as per the DFP. Reconciliation should be done. This important one important point is we should take a balance confirmation, quarterly balance confirmation of at least top 10 to 15 creditors we should take. Next important thing is taxes and compliances. As we already know, as I have already discussed, that for the top management, statutory compliances is the key. Their main focus would be the statutory compliances. So we need to check the income tax TDS requirement, income tax section 206 AB compliance, which via income tax portal. GST correct rates have been charged. For example, if there is specific clause in the GST where the payment should be done within the period of 180 days. If it is not done within the 180 days, then the credit which was availed earlier, we need to reverse it along with the interest. In MSME Act also, in the vendor master, there should be a specific, we need to check whether there is a specific line item, there should be a specific column to tick whether it is an MSME. We need to take their MSME certificates also to determine whether they are ideally MSME, since as per the MSME Act, we need to make them payments within the period of 45 days. If the payment is not done, we need to charge interest at the I think within the period of 45 days, I think 3 times the bank interest rate. The next important thing which we need to check is so in MSME point, I would like to add that there is a specific as per this section, there is a in the recent audits which we found out that there is a specific point that within generally what we used to generally what the industry practice is, with the 45 days is calculated from the date of invoice generation. But as if we read the act carefully, the 45 days is from the date of acceptance or deemed acceptance. So later in the same provision, it is written that what is date of acceptance and what is date of deemed acceptance. It is written clearly that the date of acceptance or deemed acceptance is the date when the goods are actually received. So from that period, we need to consider the 45 days and not from the date of invoice. Next point is the e-way, whether the e-way bills are generated and annexed to the vendor invoices. So they should be linked between the e-way bill should be generated before the goods leave the premises. we need to the next point is the contractual agreements. Okay, we need to check for the agreements which with along with the parties. So there should be a standardized contracts, use of standardized contract formats for all the suppliers. The contracts which should be approved, there should be clauses which are specifically requirement by the law that should be included in the contract. For example, arbitration clause should be there in the contract. Maintain a centralized database for all the active contracts. For example, in one of the classic case I know, it is in a cement industry, and they used to supply cement. Even though our topic is P2P, but I will give an example of O2C, that they used to supply the cement, and as soon as the dates of the agreements were written in the SAP only, which they were using. As soon as the agreement is closed, or as soon as the supply would stop, so the system would only not allow us to make any further supply to the other parties. So whether the penalty clause have been properly included in the contractual agreement, recourse for the company in case there has been quality issues. The example which I gave of the arbitration, or whether if the goods are not received within time, or the goods have not been given to them within the period of time which we have promised, what are the penalty clauses, the raw materials which we have received from them, what are the quality issues which we will be facing. The next important point, there is a segregation of duties. The duty should be segregated, define and segregate the duties among the staff which is involved. For example, the person who is raising a PR should not raise a PO, or the person who is raising a PO should not go and write in the GRN register. So there should be a proper segregation of duties within the organization. Whether the segregation of duty checks are carried out to avoid conflict of interest. We need to if there is an ERP, if they're using an SAP, then we can check through the access codes which have been provided to the employees, mapping with the active employee database, whether the names of newly added employees are given effect in the ERP. For example, as I gave the example of same person procures and pays, inventory counts should be done by the distinct person. For example, as soon as we procure certain raw materials, the inventory count should be done by someone another person, and not by the same purchase head or the purchase person. So how do you report the observations to the management? So first thing, as we can see, there is an audit finding. The next is the observation grading. As I mentioned earlier, high, medium, low. It is based on how much it would affect the organization, whether there is a revenue leakage to the organization, and whether such revenue leakage is material, whether any statutory compliances have been, whether there has been non-compliance with any statutory requirement. On that basis, we would determine whether it is a high, medium, or low observation. And the root cause also I have explained, whether it is due to the people, whether it is due to the business process, or due to the IT. So how we should write an observation so that it should not be vague, and clear understanding to the management would be given. So first we would write a background about of the observation, whether any statutory provision, for example MSME or any GST Act we should give. And later we should write an observation in detail, or if required we should give an annexure, we should embed an annexure also, or we can give an exhibits. The next is the implication. This is a difficult task generally to write the implication. What are the risks? If you have understood the observation, we can easily write the implication. What are the risks involved? Generally the management won't understand the risks which are involved due to this observation. So our duty is to make them understand what can go wrong if you not follow the process, and we will keep following the existing process. So implications are divided into compliance risk. For example, there is statutory compliance risk, operational risk, whether there is a problem in the operations, the reputational risk. For example, if we are doing an audit of marketing, then then there can be a reputational risk if the other stakeholders are involved, whether the revenue leakage there may be a financial risk. The next is the recommended action. Recommended action is generally the value addition which we should provide to the management, that what they should do so as to close this observation. The next is the responsibility. Who is the responsible person who is going to close this observation, and what is the target date within the time period within which he would close this observation. So, as discussed earlier, the challenges we need to understand the challenges in the internal audit of a small and medium enterprises. There are certain organizations who follow legacy practices. For example, any of the they would not they would tell you that we follow such processes only. यहाँ पे ऐसा ही होता है. Documented there are no documented SOP. These are the challenges which we as an internal auditor and also the SMEs, small and medium enterprises, would face. Resistance to change. There may be people, business processes, and IT. They may be there in the organization for around a period of 10 to 15 years. So they may resist to change the business process which we are recommending them. So we need to how we are going to tackle them. I would explain it in the next slide. Generally, an internal audit is considered as a compliance requirement rather than and a cost center for the organization. Compliance requirement, if they are within the internal audit requirement, then it is considered as a compliance requirement, and also a cost is involved. But generally, the SMEs forget that how much value addition that they will get by appointing an internal auditor. There may be a pressure on the audit fees, the disparity in the work which versus the fees which we are. For example, the time frame for doing that audit is for a period of 30 to 40 days, but the fees is very low. So the next is the focus on the financial audit instead of process or risk based audit. Generally, the focus of the audit is on the financial audit instead of the process or risk based audit. So we may recommend the organizations to have certain ERP tools which may be an investment constraints for them, which generally an organization would think for a short period of time instead of a long-term benefits which they would get from taking that system or an ERP tool which we are recommending them. Generally in the family-owned SMEs, the staff are very loyal that they would restrict themselves from providing the information. They would not provide us with an information which we require. They would take unnecessary approvals from the top management continuously. There may be delay in receiving the information. Generally in SMEs, whenever we go with the management to discuss the points, they would generally tell us that we know these points, you can give us more points which you can give us the value additions. So generally in SMEs, we would definitely find a weaker internal controls. Example, there may not be any maker or checker also. So as I discussed, they may tell ki we already know about these points, or if, for example, in one of my assignment, I gave an example that I given recommendation that there should be a standardized process. So that the other person told me that everything is in my mind, so I can handle the audit. I can handle the operations. So there is no requirement of an standardized SOP. So such cases even we would face as an internal auditor. So what are the scope for us so that we can convince them that why internal audit is important? Continuous updation of our skills, undergoing training, certifications. For example, today's session which we are taking, thanks to Nandaji, definitely there will be certain value additions for you also. There may be a change in approach of auditing. You can take certification courses. Now there should be a specific always an auditor, chartered accountant is required to keep his knowledge updated. For the recent government announcements which apply to SMEs, example in TDS, Atmanirbhar Bharat package which was given during the COVID. one more thing which we found out in the hotel industry recently is that there was a Supreme Court judgment with respect to PF, which was given in 2019, and they were not following it. So after we raised this point of the provident fund, which they need to follow compulsorily, there was a penalty and revenue leakage for them, or around 20, I think around 20 to 25 lakhs. So including niche areas such as subsidies or tax incentives which will be provided to them as part of our audit scope. Generally, I have seen through my experience that if we are providing them from A to Z, they would require something extra out of the internal auditor. The tangible benefits which we otherwise not, which are not tapped by the SMEs, which they should, for example, they should know what they don't know. That is our duty to tell them, to tell the SMEs. We should tell them, for example, the next point is we should tell them with the best industry practices, the root cause analysis to avoid repeat observations. We should provide them with the recommendation, shuffle the quarterly process audit runs every year. Now the same area should not be taken since it would be monotonous, and even we may not get the required amount of observation. For example, in Q1, if you are taking P2P, in Q2 we can take O2C or another support function. Be a good communicator, improve on your presentation skills. We should be able, in the audit committee also, we should be able to answer the questions which they are asking us. We should be firm with our documentation. Yeah, the next point is the same. The work not documented is not work done. Generally, documentation is a requirement as of this, a specific standard in the statutory audit also only, but for internal auditor also, to prove our point, we need a documentation, 100% perfect documentation, without which we can't go to the top management with our observations. So so we should, along with the SME's vision, we should give them a certain points. They should give up certain points which would make their vision more clearer. So as I discussed earlier, a failing to plan is planning to fail. So I would end my presentation. If you have any queries, you can ask Meher ji. You can communicate it. So thank you everyone for listening to me. I hope you had certain value additions. If you have any queries, you can email me. You can also WhatsApp me.
No, the thing is, we'll have that question answer round once Mr. Mandeep sir is done with his topic. And it was really great hearing you.
Thank you.
And our session now would be driven ahead by Mr. Mandeep Singh ji. Sir, could you please? Mr. Mandeep Singh ji is having an experience of 16 years in the area of internal audit and controls, IFC audit analytics, fraud investigation, driving process improvements, process transformation, risk management, finance, accounting, and commercial functions. He is passionate about mentoring young chartered accountants and adoption of new age technology at workplace. Currently, he is heading a corporate assurance and risk management function with Atul Limited, and he had spent 14 years in FMCG sector. We welcome you, sir. So he would be giving insights on the topic internal audit of order to cash process. That includes evaluating a set of activities that begin when a customer places an order and ends when a payment is received and an order is fulfilled. The OTC process is very critical to the success of any of the organization as it represents the flow of revenue into the company. So for the deeper insight, Mr. Mandeep ji would take over.
Thanks, Ms. Meher, and thanks for your kind words. And you made my work easy, as well as thanks, Mr. Vijay. Actually, you have touched upon the few points which I was going to cover in detail. So please let me know once my screen is visible.
Sir, you are visible.
One sec. I'll share my screen.
Sure, sir. It is visible.
Just give me a minute's time.
Sure, sir.
Yeah. So whether my screen is visible in this Zoom mode?
Yes, sir.
Yeah. Okay. Thanks. This one sec.
So you're displaying the contents one, like the expectation from internal auditors. The first pointer is that. So I'm able to view that if you're sharing the content.
One sec. I'll reshare. So is it visible now? One sec. Sure. Thanks and sorry for this inconvenience caused due to IT glitch. So in my presentation, actually, I'll cover the expectation by our auditees, then pillars of effective internal audits, areas which are there under O2C processes, then the briefly how we can plan audit, then preventive and detective checks and other audit areas, and then how we can leverage actually technology where technology can help. So moving to the first point of my presentation is how what are expectations from internal audit from internal auditors. One is actually value from internal audits, which are stakeholder, whether it is these are promoters, whether are business process owners, they want from us, or whether it is audit committee, they want dual role and responsibility. One is value protection as well as the loss prevention. Actually, this is a proven statistics that 60% of value destruction in any business happen due to poor business decision, and as an auditor fraternity we can actually protect or help in protection of value loss. Second is integrated assurance. However, when we do the internal audit, our focus must not be on the fraud. It should be on the processes. It should be on the design of processes, effectiveness of processes. But we should have that eyes and ears open if any fraud vulnerable areas are there, or if we note some red flag, we must report, or we must get into little more details. And also the third area is like in any business. So there are three line of defense, and internal audit comes at third. And as Mr. Kulkarni has also mentioned that we are seen as a cost function. So when we become the third line of defense and a cost function, the one expectation is how we can plug the gap permanently. And to plug the gap, there are two solutions. One is to automate thing to do the preventive check, and second is to enable the first and second line of defense, so that most of things or most of the aberrations can be tackled at the initial stage. Then in terms of deliverable, again, I'm referring to the slide which Mr. Kulkarni has presented. So deliverable is one is on assurance on the control effectiveness, and obviously that is a main ask from internal auditors. Then focus is on the outliers. So usually in old age methods, we used to take certain samples, and in like in case of SMEs, we give the comfort basis the random samples, and those samples, like out of 1,000 transaction, we take 20 transaction. And when audit staff goes for doing audit, they take samples what are the high value items, those 20 items, and we may not find the real aberrations or the outliers. The focus is on the outlier and how we can actually track the outliers, where we can actually leverage technology, and we can upgrade the skill set of audit staff, which I will definitely cover. And third point is bringing efficiency and the effectiveness to process. And actually audit role is now moved from finding the fault to bringing the process effectiveness and working as an trusted advisor. And if we wear that hat of bringing effectiveness to business, process efficiency, making business risk free, or making business more agile, we will get more appreciation from business. And last point is communication, how we communicate our observations, because for any auditor, it is very difficult, or for anyone, it is very difficult to digest what are the things which we are not doing in a right manner. Rather, how we position ourselves, how we can actually put or place our point with more risk orientation and with the practical solution. And rather than giving the simple recommendation of putting one more people, or putting process over process, or controls over the control, so we should not actually complicate the business processes, but we should be very practical, how we can bring best in class practices, how we can benchmark practices with the best and what is happening around. And next is focus on the emerging risk. Like, so in technology is there are many risks which are emerging now and then, and which may impact the business in mid to long term, which needs to be covered, even though those may not be audit observation, but what are the things which business must be cognizant of the fact. And third is the reports should be short and crisp, so that it can be understood by the reader as a pre-read. And they should be more measurable action plan, as a format which Mr. Kulkarni has shown. So there should be a observation which must be articulated very briefly, nicely, covering all the aspects. And we should also put one more focus on the recommendation and the action plan given by the process owner or the management. So if action plans are clear, then there is a clarity at our stakeholders, which are say promoters or for audit committee, that there is absolute clarity between auditor and auditee, and actions are being taken to strengthen the governance processes. So moving to next, what are the key pillars of internal auditing? Actually, I've assembled all five, and most of them are being have been covered by Mr. Kulkarni. So one is actually bifocal approach for the risk management, where actually we should think to preserve the value, how we can help business to avoid value loss, or how we can protect value, and also how we can bring that strategic knowledge to generate some values. And value can be generated. The expectation is not that we have to do the sales or we have to do the product manufacturing. Expectation is how we can streamline the processes, and where we can actually contribute towards resource reduction, or we through automation we can actually plug the gaps, or we can actually protect the revenue leakage. The one example is, say for an example, if one person is doing or in case of say APT or order processing team, if one company has appointed 10 people, and all 10 people are actually punching the orders, and orders are being given by the customer via phones or via emails. So can we automate this? Can we create one app right? This can be one of the area where, as an auditor, we can think upon. Can we suggest if one simple app, which is mobile based or desktop based app, can be created where customer gives the requirement and that requirement get fetched into the tele or the ERP which organization is using, which will reduce this 10 manpower to say maybe 5 or maybe 4, which will help to generate value. And also it will eliminate most of the data entry errors. Second is looking at the bigger picture. So one should not see at a myopic level, but it should be at a holistic level. One should actually see the point and in an end-to-end manner, which will help to give the better solution as well as the clarity in terms of observation. Third, as I've touched upon, is how we can leverage technology so that we can work in a smarter way. And fourth is the preventive controls. We should suggest the how the gaps can be prevented instead of suggesting the detective controls. And fifth is upgradation of skills, which Mr. Kulkarni has already covered. How we can first choose people with the right skills. Secondly, how we can enhance our knowledge to cater the need of our clients. Now moving to the topic about the order processing. In order processing, actually there are largely six activity. One is which starting from the order processing and then credit management, shipping of goods, billing to customer, receivable, payment collection, and then the MIS, etc. And as Ms. Meher mentioned that O2C processes are important in our business or for any business, because if there is a revenue, then business will exist, and if there is an existence of business, then we will be there to do the review, do the audit, etc. And it becomes very critical. These processes should be reviewed thoroughly. One from the criticality point of view, second is from the vulnerability point of view, right? So moving to the first, the order processing. So actually how bifurcated, so this may be correct, may not be correct, or may not be applicable for all business. But usually in order processing, first, like the activities which are covered is the order placement by customer. Either orders are placed by customer via apps or via some other tools or via emails or maybe verbally. Second way is sales team goes and receive the order from the customer. Third is when we receive the order, we check the product availability, product specification, what has been asked. Then the customer profile, it is important for the industry or for a particular segment of goods or services where there are certain vulnerabilities or sensitivities around the product. And next is the pricing. And last leg is the order confirmation. These are the activities which are broadly covered to be covered in order processing. And the key risk around these processes, and we must actually link our audit work to the what are the key risks, and we must understand what are the SOPs, what are the processes, and what are the controls. So largely the risk is, so if incorrect order is punched, say for an example, if order is punched with a lower quantity, it will lead to the sale loss, and where opportunity can be taken by our competitor. Or if order is actually punched with a higher quantity, then there is a risk of overbilling, there will be risk of overdues, there will be risk of higher incentive payout, and then in future date there will be risk of more sales return. So which will create inefficiencies in the process. Second is overbilling leading to higher returns and incentive I've covered. Third is non-availability of product. So assuming at time of order processing, if we find that and we confirm the order, but later on we says that products are not available, which will lead to order rejection, or maybe customer may not turn up again, may lead to penalties by customer or bad customer experience. Next is incorrect product specification. If products are of particular specification or a particular batch or freshness index, if order details are not properly captured, which will lead to order cancellation or sales return. And for certain hazardous goods, assuming where we are selling those goods, so assuming certain goods which can be used for production of, say, arms, ammunition, explosive, etc., then it becomes very important to check where we are selling, to whom we are selling, and what are the end user of those goods, whether they possess requisite licenses, etc. And in absence of all this validation, there can be actually which can impact the business and which can impact the reputation or existence of that organization if something goes wrong. And last is actually the incorrect pricing. So if at time of order processing, somebody is having the authority to put the price, he or she may make an error or may commit a fraud or may have a tendency to favor certain set of customers, which will impact profitability as well as which will impact the governance or the controls for the organization. Now, in terms of checks, how we can actually, I have mentioned these as checks or detective checks. If we are doing any audit and we do the processing review, we must see which are the areas where preventive checks are available, where preventive checks can be established. Like, so the preventive checks, again, these are a few examples I have listed. So whether we should also see, first we should review how orders are getting generated to the business. If orders are coming via telephonic conversation, what are the trail available? There is no trail available. Can we suggest for a smaller business, can they receive order via email? If orders are coming via email and business is punching this manually, can we suggest for applying or deploying bots which will help in auto creation of the inquiry or order into the order in the system, so which will help to streamline the process, automate the process. And if we are having a recurring order and mid-sized companies and we are having distributor model, can we define the inventory norm at distributor end, so that if we know that distributor is there, they are using our distributor management system, and if we have defined the inventory norm, if inventory goes beyond or goes lower than the norm, order should get automatically triggered, so that we will have our products in the market and there should not be any stock out in the market. And if inventory norms are there, it will also help to ensure that there are no overbilling or forced sale in the market. Second is which I've already covered. If orders are getting generated via emails, can we actually put some bolt-on applications where access can be given to our customer, where they will put the order and order will get synced with the ERP or with the system which companies have deployed, which will again help to eliminate the manual data entry work. Then automated sale those report at a senior level. So at any senior level, so if we go for an audit, if we ask their expectation for sales, they will be interested to know how we are performing, where we can do better in terms of pricing, kahin pe fraud to nahi ho raha. And they will also interested to know कि ऐसा तो नहीं हो रहा कि प्रोडक्ट का डिमांड है लेकिन हम लोग बिल नहीं कर रहे, right? So that can be the automation or certain system based data which will show them what was the order and what was the sale at a customer level, at a sales manager level. Then maker checker mechanism for pricing. So how organization is deciding the pricing, so whether pricing are getting discussed over telephonic conversation, over emails, or whether there is some mechanism to even if it is whether there is some mechanism to just define the price and then price will get approved at a senior level. So then same way, if pricing needs to be changed, what are the mechanism, whether they are straight away making changes in the order or whether they are making changes in the price list or whether they are including the discount line items. And similarly, if nothing can be done, we can actually put that system check order should be accepted from the registered ID or from the registered email. So which will help to prevent these type of recurring issues. And in terms of detective checks, how we can actually check, and if checks are not preventive, we can check what are the processes where organization is ready to invest, where it can be translated, detective controls can be translated into the preventive controls. And in terms of detective checks, we can actually check the trends or the abnormality in the order quantity, which will give us an idea that whether there is we are neglecting particular set of customer or particular set of territories, or if there is a overbilling, whether we are doing some sales team is doing some hanky panky things in that particular territory. Same way, we can also check what are the payment terms, what were payment terms defined in the customer master and in order, whether any relaxation is given. And in certain businesses, rule is that advance billing must happen, and advance is not given by customer, but goods were dispatched by giving 6 or 7 days credit. And third is, if we are having the sale loss, we can do the trend analysis and deep dive how management is doing the analysis, what are the reasons. And if there are abnormal pricing for particular set of customer, we can look into the same, whether what are the probable reasons. Say for an example, in one of audit we found that customer which was buying the higher quantity were being supplied at a higher rate, and customer which was actually buying a smaller quantity on few intervals or few occasions, he was supplied at a lower rate. And when we deep dive into whole data, we found that this was a problem with a particular set of customer. And when we again dig deeper into this, we found there are certain personal relationship between the customer and the sales manager, which is leading to these type of favors to the customer, which can be actually looked into this. And pricing is actually the favorite topic in any O2C audit, where board is interested, promoters are interested, whether controls in pricing are perfect or not perfect. Similarly, validation of purchase order. So when purchase order is coming from customer, how we are approving, so whether those processes are manual or not manual. And last is the SOPs. So as Mr. Kulkarni has mentioned that in most of smaller organization, SOPs are not there, but whether we can help them out by providing the layout of those SOPs. And if SOPs are not there, we can actually apply our business acumen and our finance acumen to do audit. But if SOPs are available, then we can actually check the adherence to SOP. But we should suggest what are the practical things. One, SOP deviation where things may go wrong. Second, where SOP is there, but SOP is bit theoretical. We can also check that part. So moving to next area of O2C process is the credit management, which is more critical. So if we are selling on credit, then there is a risk of getting the recovery, getting the collection. And for a pending credit, we have to first assess the credit worthiness of customer, how we do the assessment of credit worthiness, at what frequency we are doing the credit evaluation or re-evaluation, what are the credit checks which are applied at time of billing or at time of receiving the order, whether we have mitigated risk by taking credit insurance, what are the credit terms agreed with the customers, and whether is it in line with the other customers of same business or with the other businesses in same field. And if there are any exceptions, be it a credit period, be it a credit limit which has to be given, so who is managing? So ideally exceptions must be managed at a senior level, so whether those protocols are getting adhered or not. So these are the areas And the risk again, in terms of credit control, risk is so if non-deserving parties or parties with the lower credit worthiness, if they are getting more credit, there is a risk or the chances of bad debts. And if credit limits are not reviewed on a periodic basis, and if any business is struggling with their business or their financial, they may actually there is a risk of non-payment or delay in payment from them. And if we can actually cover the risk with help of insurance and for export ECGC cover, so if those insurance was not taken, so it will lead to the open risk, and whether that risk is in line of the business appetite, or the whether risk is in line with the appetite for promoter or that group. And then if credit limits which are given but not approved, so it may lead to unauthorized credit limit or the credit days. And if again the while giving the credit, if customer background, specifically their reputation, their past dealing, etc., was not checked, which may lead to a financial risk. And again, the preventive checks, which can be actually suggested, one simple check is the channel financing. So if we have to sell on credit, can we help our customer to get the channel financing from the bank? It means risk has been passed on the banking channel. Similarly, if insurance is not taken, can we suggest to evaluate the credit insurance to mitigate the credit risk? Can we define a process of customer screening? Can we have a reference check for the customer? Can we take their can we do their credit evaluation through third party by spending a few rupees, right? And if there are a system or ERP in place, can we prevent the orders or the billing if credit limit is exceeded, or if overdues are there, can we avoid, or can we hold their billing? And if all these areas are there in the system, can we have the maker checker controls? So it should not happen that controls are there, but one person who is responsible for sale is actually putting unblock on the credit limit, or the person who has to do the sale, he is doing the credit evaluation, or he is defining the credit limit in the system. There should be a balance. Say in most of organization, finance and sales play that role. So assuming sales propose, this should be the credit limit, and finance check what is the due credit limit, how we can define, how we can enhance credit for a new customer over a period of time. And balance of this will help to get a better hang on the controls, or help to define better processes. Again, in terms of detective checks, if controls are manual, one can check about the what are the SOPs available, and whether adherence to SOP is there or not, whether credit limits are frequently getting changed. Say, assuming at month end, to handle the pressure of sale, credit limits are actually increased and then decreased later on. Whether credit limits, if insurance is taken and credit is actually in addition to insurance, or it is given as per the insurance coverage given by insurer. Then the process of credit limit, whether fixation, if it is there, whether there is a maker checker mechanism, and if we are taking any security check or bank guarantees, can we have a proper controls around the custody of those checks? And in case there is a default by the party, those can be actually put forward, and then we can actually sue them for the payments. So moving on next on the orders and the billing. So again, so once order is received, credit checks are performed, then the activity comes to the actual shipment, where the role is actually to prepare the order for shipment, to select the goods which have to be shipped, to ensure that at time of shipment inventory must be there. Then to select the goods, which goods will be dispatched, what will be the weight of goods, what are the schemes or discounts given to customer, and then who will transport and what type of vehicle, and then final leg is doing the invoicing and then the accounting for the sales. And key risk here is one is delayed deliveries, because there can be n number of reasons, no, putting a lower priority to certain set of customers, or there can be non-availability of stock, which can lead to delayed deliveries or sale loss, or the risk is higher discount given to particular set of customers, improper handling of goods in transit or in the warehouse, leading to loss of inventory or loss of sale. Then loading of materials higher than the build quantity, which can be actually tracked through the payment controls. Then non-tracking of the shipments may lead to higher turnaround time, and which may lead to penalty by the customer, and the damages during transit, and also incorrect details in invoices, like the GST rate, HSN code, etc., etc. And for export transactions, so it is important to mention to whom we are selling, who will pay the money. Like, so for export transaction in most of organization, there are two parties: one who is taking the goods, and secondly who will pay the money. And if that is not clear in at time of shipping, then there are complications in getting the realization from the AD bank. So those type of risks are there, which can be actually checked. And again, sorry, again, here the preventive check is how we are doing the inventory planning. So whether we are doing the daily inventory planning, and it is synced with the dispatch plan, whether logistics function is properly managing the show and actually optimizing the logistics spend. So like, so in one of area, we have seen that there were different vehicles called for dispatch to different customers, and customers were at the same route. So, and which was leading to the higher freight cost, right? So, can we optimize the utilization of the truck or the container capacity, so that cost can be optimized, which will lead to the higher revenue, and also it will have impact on the number of consignments or number of vehicles handled by our team. Second is the automated processes to apply scheme. So whether there the process to apply scheme is automated, or whether it is a manual discounts which are agreed and just deducted at time of billing, whether goods are dispatched on a FIFO basis or not. So whether pick list, if system is there, whether pick list is getting generated on FIFO basis, or pick list is generated on FIFO basis, but stock is whether actually getting dispatched on a FIFO basis or not. Whether terms of agreements are clear with the transporter for timely delivery, for damages, for the theft, etc. One is the in transit insurance, which I have not mentioned, but one of the check is whether we are taking in transit insurance. Then the point of revenue recognition. So whether we can also check in case of invoicing, it becomes important from a financial perspective, and usually in most of smaller companies, it happens to show the revenue. Just bills are getting generated, but dispatch happen in the next month. So which leads to the actually revenue is recognized in the previous quarter, but actually revenue has to be recognized in the next quarter, and same can actually be tracked or can be mapped with the e-way bill. And last is the pricing. So whether the person who is actually making the invoice can change the pricing as compared to pricing mentioned or agreed at time of order. So these checks ideally must be preventive, but if not, how we can help business to make these checks as preventive control. And in terms of detective check, one important check is actually the stock monitoring. So when we are saying the FIFO should be adhered, so if we do the stock take at a batch level, we will come to know whether FIFO was adhered, not adhered, and also we can check the condition of goods. So like, so certain goods getting damaged in the warehouse or damaged goods returned by the customer, but not mentioned as a damaged goods. So which may lead to the incorrect stock picture, or which may lead to the lower provisioning for the stock. And next is the payment controls. So assuming we know if vehicle is coming for dispatch and their weight is say 1000 kg, and we know if the material we are dispatching is 3000 kg. So are we having a check to do the payment? So when while truck is going out, or container tanker is going out, whether weight is gross weight is 4000 or more than 4000. If more than 4000, how frequently, what tolerance we have given. So all these processes can be covered. Next is on the scheme approval or the discount approval mechanism. So how the processes have been established. Is it ad hoc? Is it the monthly process? Is the discount towards month end is high, and as a result of same, there is a only dispatch happening in the month end, and for all 25 days people are actually not doing the effective work, which may be scattered or staggered in a on a day-to-day basis, which will ease out the resource requirement for the business, as well as the space at Godown. Optimization of rate I've mentioned about. GST compliances, we can check about the e-way bill, the format, the HSN code, and specifically tax should not be actually at a lower rate, so that we must not incur the interest cost, and the documentation for exports, which must be checked thoroughly. And in case we should also check about the compliances, say for an example, in certain industries there are certain incentives like road tape etc are available. So whether correct or accurate reporting has been made, and if reporting has been made, whether a claim for those incentive has been raised as along with the proper documentation and as per the prescribed timelines. So moving to next leg, which is once goods are dispatched, the next role for in or next area in any organization is receiving the payment, and activities accounting for receivable, follow up for the payments, tracking for outstanding balances, review for the outstanding payment where there is a possibility of turning the bad, or where debts are doubtful, then what whether provision is adequate or not, and if insurance is taken, how we are and at what frequency we are reviewing whether claims have been made, not made, or raised, received, not received, documentation submitted, not submitted. So those activities can be reviewed. And the key risk is actually late payments may lead to the need of more working capital or working capital blockage. Similarly, if accounting is not done for receivable, which may have impact on credit limit, or things will go under the credit check, because because the debtor balances are not updated. Similarly, if there are certain discounts or certain debits raised by customer, accounting is not done, it may lead to dispute with customer, and it is important to review the process of balance confirmation. Next is bad debt, and for export realization, the compliance risk is there. So if we have to receive payment or realize payment within 9 months, and if details are not improper, or if we have not received money within 9 months, we have to seek permissions, and we have to do additional paperwork for getting money. And in case if rights are given end to end for doing the adjustment, doing the accounting entry, making the payment, etc., then there is a possibility of embezzlement by teaming and leading. And again, the preventive checks, as I mentioned, the payment terms must be contained in the master, and it should flow in order as well as in the bill. Same way, the access rights must be there, must be maker checker controls. In terms of bank reconciliation, there must be again maker checker control person who is receiving the money or who is liaising with the customer should not be actually from the treasury team. And if money has been received, it must be appropriated within 2, 3 days or max within a week. And next is getting the balance confirmation and doing the reconciliation. So that if balance confirmation is taken by finance team and reconciliation is done by ledger, we will come to know whether any commitments given by sales team in terms of discount, in terms of certain rebates, etc. And in terms of detective checks, we can actually take confirmation on a sample basis from the vendors, from the customers. Then we can actually do the analysis of delayed payments. So whether it is happening with the all customer, whether it is happening due to certain reasons, like say for an example, in case of COVID, there were delayed payment across by the customer. Or say for an example, now there is a cyclone in Chennai, their businesses are not working for 4 or 5 days. There may be delay from that particular territory, but there are valid reasons. But is there any abnormality? Whether there are any open bank entries, we must see what is the aging, who is reviewing, and in terms of export, we must also see who was the payee as actual payee, and whether if alternate pay is there, whether it was mentioned in the document, whether tri-party agreement was there or not there. So which will help us to actually improvise the control and suggest a good control for the business. So other areas which I have not touched upon in detail, but other areas which are linked with the O2C processes, if sale is there, we have to give sales incentive to our staff. So how processes are there, how we are actually giving the sales incentive, whether sales incentive are given if sale is made, but we are not accounting for returns. If sale is made, whether it is linked to say money is collected, not collected on time. So if those controls are not there, what will happen? They will commit higher credit. They will make sale in the quarter end, but there will be delay in collection, which will lead to the value loss. Similarly, the commission. If we are having agent, what are the terms? Whether we are paying commission before getting recovery from the customers. If we are dealing into the segment of say retail industry, so there are various schemes like various credit card, they have a scheme of loyalty points or some card points they are giving, how those card points are getting generated, how these are getting redeemed, so whether these are auto checks, not auto checks, like that. Similarly, if we are having multiple outlets, say for an example FMCG or say food industry, there are various chains like so ice cream parlors, there may be chains across a certain geography. So how one outlet is performing, if distributors are there, how distributors are performing at a place, so which can actually help us to see controls at their level as well as their performance and their contribution to the business and the processes at their end, which may actually help in strengthening the control and the governance at an overall business level. So moving to next section, how we can actually leverage technology. So technology can help us in doing the trending. So this trend analysis can be done. So if I have to do manually or anybody has to do manual checks, we can do analysis for say 2 months, 3 months, 5 months, or the for the audit period. But if we are having certain tools like ACL, advanced Excel, or say certain dashboards, we can do the trend analysis over a longer period of time. We can, with help of technology, we can identify outliers. Say for an example, I'll tell you one of the case of logistics. Like with help of analytics, we actually observed that one particular transporter was providing particular vehicle, say vehicle number 1, 2, 3, 4, at multiple occasion. At one occasion, actually, he mentioned that this truck is of say 5 ton. At second occasion, he has claimed for 10 ton, and in multiple occasions there was a variation. And as a result of same, we or the client had to pay a higher freight cost. When we actually checked, truck was of 5 ton. It means that times at which he has claimed for 10 ton, 16 ton, organization had to pay the higher freight cost. Like, and when we further check, so this has happened on a particular time where a particular person was there at a gate as a security guard who was recording this or making the data entry, which helped to identify the outlier with the help of technology. And again, technology helped to bring unbiased approach, and it also enable the continuous monitoring rather than doing the post-mortem. It will help in near real-time alerts. Like, so few examples I've captured how technology can be leveraged. If you see, this is a particular case. There are actually these are numbers which are actually masked, right? So these are cases where over a period of time, in 6 months time, there was a reduction in the order quantity. So order was given by customer, but order was curtailed down. And we noted that in month of say January, for 10 customers, order quantity was reduced and the value impact was 50 lakh, and so on. Similarly, for few customer, during same month, orders were actually increased. Order was given for X quantity, but order was mentioned in system X plus Y quantity, and that was also leading to certain value impact. So if we drill down with the help of technology, and if we see if they who are the top 3 customer over a period of time where orders were reduced. So what we have noted is, like, so in Jan, customer A, there is the reduction of 12, 30, 15, so and so on. And if we further correlate with the help of, again, with the help of these type of tools, who was a sale person taking orders? So like Sonu is a person. Similarly, the top 3 customer where orders are inflated, if you see out of 25, in a month, for 10 customer, order quantity was increased. There can be order quantity or asked by the person, but if you see over a period of time, in all 6 months, Sonu has increased order for customer called X. It means what is happening, he is actually doing more sale to X, and he is curtailing the sale of A and B. And similarly, Sunny has increased order for say Y and Z customer. But if you see the gravity for customer Y, at quarter end, orders were actually increased. Whether it is leading to the incentive making or some target by Sunny at the quarter end. So these kind of questions we can actually ask, we can validate, and we can dig deeper to get a sense of a larger control. And further, if we have to see, correlate this data about the payables, or about the receivables, if or the pricing, if you see on the table, there are customer like ABCD, there are 3 sales managers, Sonu, Sunny, and Vicky. If you see for the 3 months data, Sonu has made sale at say 118 to 2 customer A and B, and to customer X, 110, almost same quantity was sold at a 18% lower rate. And if you see, the quantity for same customer was increased, and here rate was reduced. And if you see the next month also, with customer A and B, price is 120, quantity 100, but for X, quantity is 100 and rate is also 20% lower. Similarly, at March, quantity is 180 and rate is 100, whereas others rate are 22% higher. And same for say for Sunny, he is actually reducing the order from customer with the higher sale price per unit and adding the orders to a customer where sale price is lower. So if you see the previous example, it can further drill down the impact on the pricing. So which may give from this table, we can clearly depict that, or clearly make a point that there is a favor toward X, and hence A and B may not be getting that favor. And there is one sales manager, right? So on ground reality can be tested, on ground visit or distributor visit or market visit, which will help to give more picture. And if we further have to collaborate or correlate this with the collection trend, If you see at a overall level, there are 20% payments are getting delayed by 15 days. But if you see the overall trend for customer X and Y, which were getting favored, for them, the delay more than 15 days, more than this average number for the business. So what it means is they are getting higher quantity, they are getting at a lower price, they are paying late. Overall, business may getting suffered, or there can be certain practices which can be corrected at a root level. So same way in this dashboard, so a distributor evaluation can be done. Like, so there are 10 distributors. So if you see that turnover for a particular period, like so 5 crore, 4.5 crore is the turnover by the distributors, and that outlets for those distributors. Like, so first distributors, so he is having turnover of 5 crore with 90 outlets mapped to that distributor. If you see the 90% of turnover, like 4.5 crore is coming from the 10 outlets, it means remaining 80 outlets are only contributing to the 10% of the sales. And if you see how many sales managers or sale people were deputed for this particular distributor, so one can actually ask, if only 10 outlets are contributing to more sales and 5 people are actually deployed, whether it is a work, whether there is any opportunity loss, what is the need for remaining 80 if business is lower. And if you further extend this with what are the actually salary and the travel spend of these salesmen, we will come to know what value, what value is not or what cost is not effectively getting utilized, which can be actually a corrective action can be taken from the management. And as I mentioned in beginning of slide, giving it is better to give a more sharper observation and recommendation and get the actions. And say, assuming if we have to say there are 10 distributor and this is the case, overall sale is like this, there is potential and there is a sale loss of say 2 crore, business will say that this is only 1% of sale loss. But if we'll say out of 2 crore, 1 crore sale loss or 1 crore wastage is happening at distributor A, it means out of 100, if we plug only one distributor, effort will become limited to 1/100, and result will be 70% or the 50% of the value loss. Then business will define the clear action, how they will initiate the action in a phased manner, which will bring effectiveness to the business. So this is from my side, and I will sum up by saying that if O2C processes in any business are well managed, it will lead to obviously more profitability, yes, but to getting the sustainability or the sustenance in the profit, it will lead to the customer delight, customer satisfaction, and which will actually depict the vision of organization, whether organization is there to stay and grow, or whether organization is there to just spend some time in the market. So that's from my side. With this, I'll end my presentation and happy to take any questions.
It was really good to hear you, sir.
Thanks, ma'am.
So we'll switch to the question and answer round, and I have list of questions. So the first one is for Mr. Kulkarni ji. Mr. Yogesh had asked that in case of P2P process for large companies, wherein purchases made through approved suppliers and purchase quantities are as per levels defined in ERP, what controls need to be, what controls needs more focused in internal audit? Like, he was more concerned about the controls which were to be
Vendor masters.
implied.
Okay. So basically, we need to check whether the ERP controls for amending the vendor masters are robust, or if there are any backdoor entry possible. As long as the vendor is there in approved list and any amendments to vendor masters is done through authority matrix, then it is a control in itself. So as an internal auditors can check in our P2P run that whether we have access of the ERP when we will have the access to the ERP system. So as he mentioned that for the large companies, so as per me, not only large but also small companies, there should be a system-based approach which should be followed instead of people-based. So I think it clears his doubt. So you can ask me next question.
Sure. How to frame strategies for easy implementation of automated P2P solutions?
Okay. So basically the strategies which we need to follow for automated solution in ERP, it is not, I think it is not our duty to do it. The ERP implementation agency would do, and they have a specialized role in it. We can give them recommendation as to how we need to do, as Mr. Mandeep also rightly mentioned. But the role we play as an internal auditor is to bridge the gap between the board and the implementation agency to track the progress as per the blueprint.
So I would like to add to the
Yes,
point
yes, sir.
which Mr. Vijay has mentioned. So as an auditor, we can suggest, we can
Correct.
make a meeting with the process owners, with the leading companies, or if we know someone, and that's how the collaboration and the networking helps into play. But however, we cannot take the responsibility of doing the implementation. Then it
Correct.
will become the conflicting role for us.
Yes, yes, yes. As though we are only implementing and we are only auditing.
Yeah, and in terms of you asked about the strategy, with my experience in the commercial domain, I can say the strategy is putting the processes in place. Actually, if internal audit team is in-house, they cannot take this task because of their role. So this task has to be done in a collaboration between business with the procurement team and their line one and line control managers. However, they can consult, and as an internal auditors, we can actually give them suggestion which are the areas which can be put into place. Like say for an example, the first question was there: what are the controls in vendor masters?
Correct.
Right. So if vendor master is there, so the criticality for vendor master for organization is that how we are mapping the vendor bank account details. So who
Correct.
will map vendor bank account, whether it is a business team, whether it is IT team or the treasury team, and also what are the trail available. And again, as I mentioned, how we can leverage technology, whether trail is available with the timelines, we can see the abnormal trend, whether bank account change from account number 123 to 12345, and then again payment happened and again change back to 1234. So whether some hanky panky things are happening, not happening, those can be controlled with more rigor or with the audit trails. And as per now audit standards or by statutory auditors will also check for the audit trails in any ERP. This will
Correct.
become more critical.
Correct. And to add on, I will like to give you one example. So basically, when I was auditing, what the employee used to do for making the payments to certain companies, he used to send a mail to banks that writing an account number. Okay, and he used to mark CC to everyone, whoever were the senior management, that and he would send a mail to bank. Afterwards, he would revise that same mail, but he will not keep the CC to anyone, and he will just send it to bank. That there are the updated, we have an updated account details, so payment should be done to this account. So when he used to write in second mail, he used to write his own account number, so the payment would be directed directly to him only. So these are the issues. This was the type of fraud only which he used to do. So which I had identified in my previous audits. So you can move to next question, please.
It is written there how to control and minimize the cases of emergency purchases.
Okay. So if there are if the budgeting and the reorder levels is controlled properly, there is no question of emergency purchases. Another solution which we can do, which we can recommend to the management, is to have JIT, just in time process, where we keep the vendor close by for stock which is critically required to us. As far as possible, I think emergency purchases should not be done for non-critical stock, but they should maintain a list of all the critical stocks, and accordingly they should have a reorder level set in the ERP system only.
So assuming in my previous organization, how we have defined for emergency purchase, because there can be business exigency, like the flood I've mentioned, right? So the practical solution was, if emergency purchase is there, how we have to do? We have to take the express delivery or the air shipment, right? So if that expense has to be incurred while getting the goods, it must be approved by one level up as
Correct.
per the DOA metrics. If there is an emergency tag is there, so assuming business head is approving, it should go to the MD. So which will sensitize business that somebody is reviewing and approval is there. So which will actually take care about the business need, and also appropriate actions are being taken to actually plug those gaps or avoid these instances for known wanted things.
Correct.
The next one is for Mandeep sir. It
Yeah.
is asked that for O2C, if in case of pharma sector, they had shared their case, in which the month-end invoices is being done on dispatch of goods from factory finished goods store on last day of the month, while the goods reaches the customers, the stockist on first of the next month. In that case, whether sales booked on the last day of the month is valid. In this case, stock in transit is being taken by the seller or not buyer and not buyer.
So
So
again, it depends on the agreement terms. So when risk and rewards passes, say assuming if our role is over, if we have shipped and goods have been shipped on 31st, right? It means we can recognize revenue. If our risk passes when goods are actually received by stockist and confirmed, right? Then we have to consider sale in the next month. But again, the catch over here is, so I've touched upon this point more from the effectiveness point. So assuming sticking to this particular case, invoicing are happening on the month end, correct? So assuming there are 200 bills happening on the last day of the month. So if their organization or they suggest, if they are working for client, if they suggest for say instead of a month, can we have a fortnightly closure? So what will happen then? There will be a split of say first fortnight there will be say like bills of say 75, and then out of 200 say to 125. Then the actually the max level of the work is 125 bills. And if we actually drill down the person's work, if one person actually punch 20 bills in a day, what it means, at a max capacity we require 10 people. Those 10 are not fully utilized. If we split or stagger, we require only 6 people, assuming the salary is 40,000 or say 15,000, which is a minimum wage in India, in any state. So say if we take 15,000 into 4 at one depot, and there are 4 depots, so 15,000 into 16 into 12, that will be the saving potential, and which will actually ease all this documentation and eliminate the chances of error, because in hurry there will be higher chances of errors.
one of the person has asked that what auditors should check and advise management in case of probability of tender fixing.
Sorry, which one you mentioned?
So they were asking about what we should advise the management in case of probability of tender fixing.
So again, there are various things. One, if it is for P2P, how we are actually selecting our customers, or sorry, we are selecting our vendors, right? So whether there is any cartelization, right? Then the due diligence. Then one is the addresses, whether there are address matching, whether there is, if tender is of higher value, we can do the market intelligence. Same for customer. I don't think so. If tender is there, we have to sell. If these are two customer, same parties, it will actually going to increase the revenue, which may not be impact, but yes, the reputation and also the receivable parts needs to be ensured.
The last one is what kind of preventive control can be implemented for POS machine in cases of retail outlets?
POS machine, correct. So in case of POS machine, actually, one thing is, So one is the daily reconciliation of this, which is a detective check. In case like so, POS.
Logs will be generated. We need to check those.
Correct.
The
Logs
which
of the
we-
machine,
logs
counter
of the
of the
machine.
machine. And if like so, I'll tell one classical case. So I did audit of one retail segment, which was running some say saloons and all. So they were giving certain schemes, right, for credit card billing. And what we have noted is particular card number was getting swiped again and again at one location. So when we deep dive into this, we noted that this card was pertaining to the saloon manager
Correct.
who was actually taking the cash, he was pocketing the cash, and he was swiping his own card. Right. So again, one check is how many time one card is getting punched, right? Say assuming if there is certain scheme, or the another case, like so there was one chain called Subiksha when I used to do my articleship. What we noted, and obviously not as an auditor, but what I've observed is there was a the cashier at Subiksha store. What he used to do after his on the first day of his credit cycle, he used to swipe his card and he used to take money in his pocket and for meeting his expenses for investment. And when I asked कि राहुल ऐसा क्यों करते हो, he told me कि साहब क्या है 52 days का क्रेडिट मिलता है ना, चेन को तो कोई फर्क नहीं पड़ा. So whether these type of things which are getting manipulated by the billing staff, these can be checked with the help of these kind of data. I hope I answered the question.
You did, sir. So that's all for today. So before we conclude this insightful session over internal audit of procurement to pay and order to cash process, I would like to express my gratitude to our esteemed speakers, Mr. Vijay Kulkarni ji and Mr. Mandeep Singh ji, who had shared their invaluable insights and expertise on this crucial subject. It has enlightened us, and their deeper knowledge and experience for the topic have illuminated the importance of internal control in both the processes. Their informative presentation has not only expanded our horizons in understanding but also inspired us to embrace the highest standards in this field within our organization. We appreciate your dedication, sir, for sharing your knowledge and your commitment towards the topic. On behalf of all attendees, I extend our sincere thanks to both of you for your time, expertise, and engaging presentation. We look forward to more opportunities to learn from you. And let's give a virtual round of applause to both of you. I would love to thank and extend a sincere gratitude to board, our institute, and our technical team, and everyone who had dedicated their time and effort to make this session a success. Thanks a lot.
Thank you. Thank you, Mayor. Thank you, Mandeep ji.
Thanks, Meher, Vijay, and thanks, audience. Right, in case of any further queries, you can connect. And
Sure, sir.
thanks,
Actually, the
Meher,
thing
for
is,
more.
many of them has asked for the PPTs, which both of you had made.
Sure.
So,
I'll share with the your team, Mr. Arun ji. I will share.
sure.
I will convert this PPT into PDF. So
Hmm.
we'll share. Definitely, we'll share. And
Sure.
thanks, ICI, for providing this platform.
Thank you. Thank you. Thank you, Ren. Sure.